All right. So then what does this say then for the, as an investor? I mean, the obvious play here is to pile back into retail stocks, I would assume, and anything
Yeah,
else.
I think, in the newsletter, I came up with something about 10 weeks ago that if it doesn't go bankrupt, it goes to new highs.
Mhm.
And, my view was find areas of the economy where you can find companies that have solid balance sheets, but have been maximum impacted by coronavirus. And if you can find a company that you're confident that if they had no revenues, they would stay in business for 2 years, then that's the kind of thing. And many of those are still down 30–40%. That's the kind of thing you would want to own. I would look at the fitness area, gyms, movie theaters, areas like that. I would be more careful around areas like airlines and cruise ships, et cetera. Not because I don't think they come back. It's just a question of that. Could you go 2 years, without going bankrupt? But I got to tell you, I don't think it's going to matter at all, because the bigger setup here is if, and I'm saying if here, man, like I'm not saying that we know this for sure, but I think there's pretty strong evidence. If I'm right and deaths are sub 100 continuously from September on, when you combine it with the trillions of dollars of liquidity that are washing through the economy, both fiscal and monetary, I think you're going to see a 1999 type melt up in the market. So to be honest, as a fundamental investor, I think you want to look for these setups where you take these sort of maximum pain point companies like movie theaters. If you can find one that's not going to go, that has a great balance sheet. So, but yeah, I honestly believe that we are in front of something that looks a lot like the 98–99 time period. And, to give you that analogy, I was a portfolio manager. I became a portfolio manager first in 96–97. 97, we saw the Asia crisis out of the Thai baht and a whole bunch of stuff there. Eventually that drove long-term capital, that highly leveraged hedge fund. And again, I say that because I'm old enough that long-term feels like yesterday. It was probably, there might be some 30-year-olds who are like, what the hell is long-term capital?
Yeah.
But then the Fed stepped in with a massive amount of liquidity to basically buttress the markets. But then, and this will really blow your mind, because of Y2K, they kept the liquidity high because that was a thing back then. So you took this liquidity on top of what was fundamentally a sound economy where there was an exogenous event. You did it around the time that you had a technology, evolution/revolution. I think today's themes are going to be EV, electric vehicles, AV, autonomous vehicles, online gambling, these things. And you created this giant cocktail that from the time the bottom of the market from long term, which is, August or September of 1998 to March of 2001, the NASDAQ was up almost 200%. That's 16, 18 months. I got to tell you, I think we're sitting on something like that. And so far, the NASDAQ is up 30 or 40. So, do I think that we could see in 2021 Tesla 3000 and the NASDAQ, 15,000, 20,000? Absolutely. I'm not saying any of this is good. I'm not saying these are good outcomes in the long term. I'm also not even saying it's probable, although I do think it is. But is it possible? Absolutely. And so I think as an investor or trader, and, I built much of my career on short selling. I'm one of the better known short sellers out there, Whitney and I both. I would be running a very small short book right now